But if you look at the equal weight, this is the ETF, it does paint a different picture. We got a high here, lower highs throughout, there's a down channel. So it doesn't really look good at all. What does it mean? It simply means that there is only a selective or handful of stocks actually push up the market, push up the S&P 500, push up the Nasdaq 100. And because the S&P 500 actually weighted, it doesn't really have one vote each. That's why those heavyweight can push the market up, while many of them do not really perform. That's the divergence in terms of the components of the S&P 500 and also in the general market breadth. Overall, only a selective of the stocks are actually moving up. But having said that, the market breadth could change as well. So we need to participate in the run when there is a valid trade setup. Let's jump straight to S&P. Last Tuesday, we were somewhere around here. So Monday, Tuesday, last Tuesday is here. I talk about that. It's still testing the resistance level. We do not really have a clean break. I talk about the potential scenario of a false breakout, which it did materialize. So far, there is a false breakout, just a temporary commitment, and then we have a reaction right here. But look at the volume. There isn't much supply show up when there is a false breakout followed by a reaction. Instead, it's normal volume as per usual. And at most, there is just a slight increase in terms of the supply. And after that, it did not even bother to test this access area. So far, it tested this 41.25. This is like the previous trading range zone and get supported. This is a great thing for the bull. And after that, on this 2 bar, there is a reversal and going up. And today, future is still running at the moment. There is a great news coming out from Biden, means that now that the debt ceiling issues could be resolved probably in another week or a few days. So depending on the rest of the voting. But so far, the debate has been going well. At least that is the outcome. And also the market has proved it, gapping up, but profit taking. So far is very bullish to me. And we still have this kind of the rally, consolidation, attempt to break out. And in terms of volume, they are low in general. So far, there is no threatening price action despite the false breakout. If the bear is going to attack the market, this could be a great chance. So given that there's a catalyst of the debt ceiling, the macro, there's a lot of the reasons that can be used to attack the market. But based on the volume here, it doesn't look that threatening. This is like a normal pullback at most. Overall, this is still a accumulation structure. No doubt, I talk about this many times. This is the trading range, and we got this trading range going on. And we got a low, higher low, higher low, higher low, higher low throughout. Started last year, October, until now, definitely more than half a year. Higher high, higher low. Well, probably not the higher high, but definitely higher low. And if we do get this successful breakout, keep going up, 43 is likely. This is the next target. And like I say, last week and a few weeks ago, S&P 500 not the best index to trade. But the Nasdaq, if you look at Nasdaq, that's a totally different picture. Very strong momentum and acceleration to the upside. When we see the breakout of the pivot, I talk about this. First target has been hit, has been achieved, and with a climatic fashion. But what is the reaction? The reaction is like a normal pullback, tested this bullish momentum bar. And we do see some increase of the volume, but that is not threatening at all. It's like a normal volume. And after that, this bar looks climatic. And to me, this is extended overboard. But in terms of the volume, it looks all right. It doesn't look that threatening yet. But in terms of the level, now we reached a key level. This is a level that I expect some pullback. If you look at the past, this is sort of like the x-axis. The axis line is somewhere around here. So it has been tested quite a few times. Here, 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 here. Now, again, we tested 14400. This is the level that we need to pay attention to, especially after this climatic run. This look a lot climatic. So in terms of the price action, but in terms of the volume is high, but not that threatening. I expect some kind of the pullback. A pullback will be very healthy. Even if it come all the way back to about 1400, that's still healthy. If it could have just probably test one half of this bar, then that is super bullish. And I expect the momentum to continue to go all the way to test this 15200. That's the previous Shanghai level. That is Nasdaq. So like I say, if you look at the volume of the leverage ETF, that could suggest some kind of the momentum still ongoing and a rotation might materialize. If there is a lot of the overbought of the extension in terms of the semiconductor, then there are plenty of the big cap, mega cap of the tech stocks can be traded and rotated. Let's look at it shortly in the US watch list. And in terms of the legged, so far, if you look at Dow Jones, it does show a different picture. Look at this. This is different. Dow channel. And if you look at Russell, it's still within a trading range, going nowhere, right? Hit the resistance, coming back down. The only performing index I would say is still the Nasdaq 100. So only focus on the strong sector and also the outperforming stocks. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.